The Fed has turned the money printers back on, which has already caused Bitcoin to start pumping like crazy. And we are looking at the possibility of a $50,000 Bitcoin within just a few months. How's that going to happen? Well, we're going to talk about that. All right, so here you can see Bitcoin, this huge pump from 19,500 all the way up to currently at 27,394. So massive pump in about a week, and this is largely fueled by the banking crisis and the Fed basically being forced to turn the money printers back on. So what does this look like? Well, here is the chart of the Fed's balance sheet, their total assets. So basically what this means is when this goes down, it means they're sucking money out of the economy. When this goes up, they're injecting money into the economy. And so as you can see, for the past year or so, they've been reducing their assets, sucking money out of the economy, doing the quantitative tightening. And now we just see right here a huge spike just this past week. Bam. They just injected a bunch of money into the economy. This is about $300 billion that they just put back into the economy. So that's a big part why Bitcoin is pumped so hard this week. This is super bullish, and this isn't the end of it. JP Morgan Chase is estimating they may inject up to $2 trillion into the economy to stop this banking crisis. So we may see this just keep going up, and all this QT they've done the past year be erased, and we'd actually be way above these levels. So we may see a lot of money pumping back into the markets, pumping everything once again, just like we saw back in 2020, 2021. So this may cause a massive bull run for Bitcoin, and that's what we're going to talk about. So obviously, if that happens, very high likelihood we're going to see Bitcoin just take off here. And how high is it going to go? Well, I think we could go all the way up to $50,000 within the next few months. And let me show you the last bear market for comparison. So this was 2018 bear market, and then 2019 we saw something that looks pretty similar to what we may be seeing right now. And if we take the Fibonacci retracement levels, you can see it went right up to the 61.8, the most common retracement level, actually a little above it. And if we go over to today and we do the same thing, take the Fibonacci, well, where's the 61.8? It's at about 48,700, so just under 50,000. So if after the last bear market we saw this massive pump right up to the 61.8, we may see that again. That is the most common retracement level. And especially if the Fed turns the money printers back on and injects $2 trillion into the economy, we should see a massive bull run here. So 50,000 I think is actually quite realistic if that happens. So, and this could happen in a few months. If we look here, these are weekly candles. It only took from when this pump started in April. By June, it had already pumped all the way up there. So that was about 2-3 months. So we could see this within 2 to 3 months. So maybe we'll see this by June we'll be at 50,000. Who knows? What do you guys think? If we look at the short term here, we did just have this huge green weekly candle, broke through key resistance here, and our next price target is around 29,000. That's our next resistance. So I would expect next week we will pump right up to 29,000. We'll see if we get rejected there or if we can break through that and head even higher. So exciting times. We're living through history, guys. Thanks for watching, and I'll see y'all later.